All right, Marco had the following sales and accounts receivable balances prior to any adjustments at year end. They had credit sales of $10 million, they had accounts receivable of $3 million, and they had an allowance for uncollectible accounts of $50,000. MAR uses 3% of accounts receivable to determine its allowance for uncollectible accounts at year end. So if you guys remember back on the allowance method, there will be three different ways of computing the allowance for uncollectibles. There's going to be the percentage of sales, the percentage of accounts receivable, and the aging method. It says here that we're using 3% of accounts receivable. That is going to immediately indicate that we're using the percentage of accounts receivable. This is also known as a balance sheet approach. First and foremost, but what's the ultimate question? By what amount should MAR adjust its allowance for uncollectible accounts at the year end? So what we're going to be calculating is the ending balance of our allowance for uncollectibles. So what do we remember about our allowance? That these are considered what? They are considered a contra asset, which will be reflected on our balance sheet. Okay, so what we need to determine is we are going to be using 3% of our accounts receivable. And when we are using the accounts receivable method, this computation is not going to be determining our bad debt expense, but rather the required ending balance of our allowance for uncollectibles. We know that our accounts receivable is 3 million. The percent that we think is going to be uncollectible is 3%. So 3% times 3 million is going to be 90,000. We are then going to be reducing this by our beginning balance of the 50,000. And again, this is going to be the balance that existed prior to any adjustments. So we're going to be subtracting out 50,000. So we can now calculate the required increase to the allowance account that we need, or AKA our adjustment that's required. 90,000 less 50,000 is 40,000. This is what is going to be debited as our bad debt expense and credited as our allowance for uncollectibles. B is going to be your answer here.